Tuesday, October 1st, 2024, Monaco 64, home of alternative economics and contrarian views. So October, it's a great month. And why is that? Well, that's when my birthday is. Anyway, we're going to look at how Putin, or more in particular, the Russian finance ministry, has fired a shot across the bow of the paper boys on Comex and the LBMA. I think the commercials are getting worried, and I think they're going to have to run for cover, and you're going to see why. And it's to do with gold and silver, of course, and also some other precious metals. Before I start today, I'm going to recommend a book. A lot of you ask me, of course, for book recommendations. I do have, I think, even a playlist, which I'll probably put up here with all my videos on book recommendations. But there's one here that I think is really interesting. It goes to show that you never know about certain institutions. They portray themselves as saintly or godly. But this one's about the Vatican, God's Bankers, by Gerald Posner. And it's a history of money and power at the Vatican. And yes, I've read this once quite a while ago. And it's really interesting, I would say. It says here, from Gerald Posner, a master chronicler of legal and financial misconduct, comes a magnificent investigation 9 years in the making, tracing the political intrigue and inner workings of the Catholic Church, told through stories of 200 years of prelates, bishops, cardinals, and popes who oversaw it all. Posner uncovers an eyebrow-raising account of money and power in the world's most influential organization. Well, yeah, the Vatican has been around for over 1,000 years, so it's probably the oldest corporation in the world. Part thriller, part financial tell-all, this book reveals with singular precision how the Vatican has evolved from a foundation of faith to a corporation of extreme wealth and power. So there you go. One interesting thing is that basically the Vatican acted, I'm not sure if it still does, as an onshore tax haven for wealthy Italians, at least up until probably the 80s, I would say, according to this book. So how did that work? Well, if you're a wealthy Italian, you could open an account with the Vatican Bank and keep, pay no taxes. That was how simple it was. And I'm not sure if it's still applicable. Who knows? Anyway, highly recommend the book. And it's an eye-opener, as it says here. So back to Putin, or the Russian finance ministry. And yes, yesterday we saw a bit of a shakeout of gold and silver, and we're going to come to that in a minute. I'm going to show you some long-term quarterly charts. And why quarterly? Well, because it's a good way to look at the trend. It takes away the short-term noise, and it shows us, what's really going on. But anyway, I saw this from Willem Middelkoop. He's a fairly prominent analyst in the precious metal space. I think he runs a fund as well. And he posted yesterday, it's official. Russian government starts buying palladium, platinum, and silver besides gold. And this is not even the People's, not the People's Bank of China, but it's not even the Russian Central Bank. It's the Russian Finance Ministry. There is a difference there. So this was announced yesterday, September 30th, by Interfax. And it says the Russian Finance Ministry proposes to allocate 51.5 billion rubles in 2025 Well, that's a bit over $500 million. Doesn't sound much, but if you know about the precious metals space, especially palladium, platinum, and silver, they're very small markets. Yes, they trade in the billions in the paper market only because it's so leveraged. And if you want to learn more about that, I'm going to put a video here, interview I did recently with David Jensen, where he explains how the LBMA works, how much of a virtual reality market is. And that's why I think it could make a big difference, even though it's just over $500 million. And it says here 51 billion rubles in 2025 to buy precious metals and gemstones, according to the draft federal budget for 2025 and the planning period of 26-27. The list of metals that are planned to be purchased includes platinum and palladium. The State Previous Metals Repository, or Gokran, which built palladium reserves during the Soviet period, sold all of them by 2012, has not started buying the metal again until recently. The plans for budget allocation in 2025 correspond to the limit for precious metals and gemstone purchases in 23-24. The same amount will be allocated for these purposes in 26-27, although the previous plan was to allocate 38.9 billion rubles. The plan is to acquire refined gold, silver, platinum, and palladium to increase the share of highly liquid assets in the state fund. The explanatory note says, so it's interesting. We'll probably never see this kind of announcement from His Majesty's Treasury here in the UK. I've seen that a lot of commentators are noting how many billions of pounds that the UK has kind of lost by the sale of half its gold by Gordon Brown in the early 2000s. And that's true, but my question as well to these commentators, and a lot of times they're on the other side of the political aisle, and you all know that I'm apolitical. The other question I ask, well, the Tories had 14 years to buy some gold, and I remember well when I started this channel back in late 2015, the price of gold was around $1,000. In pounds, it was around 750 pounds. And now we're approaching, well, we've hit 2,000 in pounds. We've hit 2,680 in dollars. And the Tories didn't add 1 ounce to the country's reserves. So, yeah, don't just talk about Gordon Brown, and I'm not forgiving Gordon Brown at all here, but also ask the question, why aren't we buying gold as a nation? Well, I can tell you why. Because gold is the enemy of statists, yeah, and I know Putin is a statist, but I think he seems to be a bit, the Russians seem to be a bit more enlightened. It does sound weird for me to say that, but that's the way I see it. And statists, they don't like gold because gold forces whoever or whatever institution's buying it to tighten their belts. You can't buy gold unless you have fiat currency savings. And our countries, not just the UK, but the US and Western Europe, have been running deficits for decades. So we never have any surpluses to buy gold. And they always want to fight their wars, make sure their sponsors in the military-industrial complex or anywhere else get the bang for their buck. So, yeah, that's why it doesn't happen in the West, and that's why our currencies are going down the drain. And how is this important for the market and the price? Well, I think it's important because if you also look at India, and Tavi Costa just reported recently here that India is buying loads of silver. India imports of silver have surged to record levels, as you can see here, for 2024. And the year is not even over. And I think the beginning of the year, maybe in March or April, they had already bought more than they bought in the whole of 2023. So silver, and they're not buying paper silver, they're buying the real thing. And then you have Hungary as well. William Middlecop, thanks again. He's reporting Hungary raises gold reserves to 110 tons from 94.5 tons. Hungary's central bank has raised its gold reserves, citing the precious metal's role as a safe haven amid rising market uncertainty. It says central bank raised its gold reserves by more than 10 times in 2018 to 31.5 tons, and then tripled it in 2021. Gold has gained, so there you go. Of course, Hungary and Orban are criticized by the EU. They're considered an outcast. And I would say, yeah, always look at countries like Russia or Hungary when we're told what kind of countries they are by the mainstream and our politicians. Turn it around 180 degrees, I would say, not 360 like the, I think it was the German foreign minister said. 360, you get to the same place, right? Anyway, and this is where it gets interesting because this is another tweet, and you might be saying, or post, wow, you're only looking at Twitter, but these pieces of information are really relevant because according to the Commitment of Traders report, or the COT report from Comex, the bullion banks, which they're not many, they increased their short position in silver as of Tuesday last week. They published these numbers like a week later, so we never really know the fresh numbers. And you probably figured out why, because they don't want the market to know. They don't want to be transparent, but it says here from the dude, the short position in silver is 698 million ounces. Well, that's almost a whole annual production of silver, which is, I think, about 800 million, or maybe even 850 million. I'm not too sure the exact number. They added 9,038 short positions to prevent spot getting to 3250. Eventually, it did get to 3250 because this report is as of last Tuesday, because on Thursday last week we went to 3270. So yeah, and I bet they probably increased their shorts yesterday, but we'll only find out about it next week. I wouldn't be surprised if it increased by another 9,000. And for that 9,000 contracts, you multiply that by 5,000 ounces. And that's the size of the Comex silver contract, and you can work out how much that is in ounces and tons. So there you go. The problem with the paper market is that with the world, especially outside the West, increasing its consumption and purchases of silver, we've seen Russia, India, China is not going to stop, and seeing that silver is not just an important industrial metal, it's also an important strategic military metal. Many people don't realize that. And I think that's kept a little bit under wraps because it's very sensitive. And yeah, so let's get to the charts. I told you earlier that I would, and why I'm not concerned, and why looking at a quarterly chart is a good thing. So the first chart I'm going to show you is a quarterly chart for gold going back to Bretton Woods era, early 70s. And the thing with this chart, it looks very like it's overdone because it's a linear chart. So I wanted to show you the linear chart first. And one could argue, well, we've never gone up that much in a quarter like we did in the third quarter of 2024. And that's true in the linear basis. And linear means it's not a percentage basis. So just look at this chart, and now look at this next chart, which is not a linear chart, is a logarithmic chart, which looks at the percentage change as a percentage change. And you can see that the increase last quarter, in the third quarter, yes, it was a big one, but compared to the past, especially in the 70s, we had much bigger percentage increases, as you can see. From the early 2000s to 2011, it was a little more steady, as you can see. It was, looking at the chart from the 2000, early 2000 to 2011, you kind of, looking back, you think, well, I should have just kept buying gold and good dollar cost averaging and held on to it, because it was like a straight line. Of course, on a daily or on an hourly basis, weekly basis, there was a lot of movement. And I think, I think we're starting a kind of trend that is very, very similar to the one we saw, especially after 2004 and 5, because as you can see, there was a kind of a teacup as well back then, from the late 90s or around 1997 to 2004. There was a teacup, and when we broke 400, there was no stopping gold, and that's, I think, when the bull market was confirmed. And it's interesting that the FT tried to denigrate gold around the same time, April 16th, 2004, when the price is at 400. Going gold. The pointlessness of holding bullion continues to sink in. So there you go. Let's look at silver now. Silver's pretty much the same story. And I've got like a linear chart here. It's not logarithmic, and it's more short term. It's only going back to 2005, but this is the highest, yesterday was the highest quarterly close since January 2013. And we can see here how important the 30 level was. So I think it's only a matter of time until we trade towards 40, and it could be before. Well, it's difficult to predict, but I would say it will be before the end of this year. So yeah, that's how I see things. So now we can quickly go through where the markets are this morning. It's 8:15 a.m. London time. We've got spot gold at 26.43. It's up about $9. High's been 46. The low's been 30. Silver's at 31.30. It's up 15 cents. High's been 31.50 and the low 31.09. Dow futures down 112. Nasdaq is down 50 points. S&P down 13. The currencies, we got sterling down 0.2. The euro is down about 0.2 as well. The dollar has held so far against the yen. We got down to like below 142 yesterday. Now it's risen. We're now at 144. And that, that calms down the carry trade worries, even though the stock market is down. What about crude oil? Crude oil is down just under 1%. It's 67.39. That's the West Texas kind. The Brent kind is also down about 1%, just above 71. What about the bond markets? Treasury yields have been rising lately. This morning, though, they're down a little bit. I see the 2 years down about 2.5 basis points. at 363. I think we were down to like 355 last week. So I think the jobs data that's coming out this Friday, that will be very important, of course. And the 10-year as well this morning is down 4.2 basis points at 377. So yeah, the curve is still uninverted or disinverted by 15 basis points. Last week we got up to 20 basis points, normal yield curve, not inverted. So there you go. With that, I'm going to wish you all a very good day. Take care. Bye.